Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq 100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq 100 as the month of May opens up with stocks trading lower following in April. That was one of the toughest months that we've seen since 2008. Isn't that right, Brian?
It was. For the Nasdaq 100, we had its biggest monthly decline since 2008, as you noted. That's month over month, as of month end. In March 2020, we did see the index sell off more than that, but we were able to recover before the end of the month on global central bank stimulus. But yes, a lot of carnage out there. I think the recent concerns have been kind of what's going on in China right now with the increasing lockdowns that they're doing, and potentially now Beijing could be next. So I think that concern over what that will do, not just to supply chains, but overall economic activity, global growth. China makes up 40% of 2022's estimated global growth. So there's certainly a big change there.
So it seems like it comes back again to macro, to Fed, what's happening in China. Of course, we have geopolitics as well. So Brian, let's take a look at your first chart here with the Nasdaq 100, fresh technical levels to watch. And it looks like that downtrend is still a little bit aggressive here.
Yeah, absolutely. So let me just flip to the daily period. We had been looking at this, possible double bottom here, and we did get the breakout over the 50-day moving average back in middle of March or so, but stalled at the 200-day, rolled back over, and this prior resistance here we thought could act as support, and it just did not hold, and so it's blown through that, and now as of last week, making new lows. We're seeing finally that the bigger, larger cap growth stocks are really beginning now to roll over. Whereas the downtrend was first led by the small caps, then into the mid caps. So, that's been underway. What's going on now is we're breaking that 13,000 level. We closed below it last week on Friday, and seeing some downside follow through today. We're down about 0.5% at the moment. So that 13 level will be key. If we can get back above it this week, that would be nice to see. Otherwise, I think down from here would be around 12,200 could be the next target, which is about 4% from here, and that represents the lows from Q1 of last year.
Right, and let's take a look at your 10-year chart as well, because at the top we had mentioned that the Fed activity is really one of the larger reasons why we're seeing such volatility in U.S. equities.
Right. So the rate hikes, the Fed is, as of Friday of last week, this is a chart here of the number of hikes that the market is pricing in for 2022, and on Friday we closed at 10. So that's pretty extreme. A lot of people in the marketplace don't think the Fed will be able to get there, but we did see some economic data come out last week. The employment cost index was 1.4% versus versus consensus of 1.1%. New home sales had fallen by about 8% month over month. So we're seeing some concern there on the loan growth side. This here's a long-term quarterly period chart of the S&P 5, of the 10-year U.S. Treasury yield. And this goes back to the top here in 1981. And we can see there's been a number of touches when rates rise of this resistance line, this downtrend line, going back roughly 40 years. So it's a pretty significant, pretty important chart right here. And we're seeing here in the first quarter of, now in the second quarter of 22, we're seeing probably the biggest breakout above this line. So the question remains is this the start of a major change in trend, or will this be just a head fake and then we'll roll over from here? Again, going back to the Fed, what are they trying to do? A lot of people who are candid about it think, essentially they're trying to, crush demand, drive up unemployment in order to get their arms around the inflation problem. CPI is over 8%. So, there's a lot to be, a lot to play out in the months ahead.
All right. Appreciate the insight as always, Brian. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.